flashing for you on the screen. The net profit has come in at 1,097 crore rupees, which is a bit lower than the CNBC-TV18 poll of 1145 crore rupees. It was expected to, and the stock also has come off from the day's high as well. Of course, we need more details as far as the revenues. So consolidated revenues at 8,608 crore rupees, which is again lower than the CNBC-TV18 poll of 9,510 crore rupees. It is a miss on the top line for sure, a mild miss on the profitability, and this time around it was expected to see a growth in terms of volume, so we'll get that up for you as well. This time around, double-digit revenue growth was expected on a high base and mid-single-digit volume growth. So far it has been a miss as far as the profit and revenue number for Asian Paints is concerned. We'll be getting Mangalam as well to analyze those numbers for us in just a bit. But yes, from the basic numbers, the revenue and the profit so far, it looks like that Asian Paints is a miss right now. Quarter-on-quarter improvement in margins is something that was expected. We look at the margin number last quarter. Last year, that is, the margins came in at 18.1%. This time around, EBITDA margins are expected at 18% for Asian Paints.
Let me just read out the statement that's coming in from the MD and CEO. The domestic decorative business registered flat volume and value sales delivery for the quarter on a very high price increase base in the previous quarter. So, Mangalam, the volumes appear to be flat for the domestic decorative business. The extended monsoon in October also affected retailing in the peak festival season. But demand picked up in November and December, leading to double-digit growth for the decorative business in December. Overall, on a 9th-month basis, they're saying decorative business continue to see healthy double-digit volume and value growth.
Well, it is a miss, Asian Paints, no two ways about that. The reason why it's a miss is on a couple of factors. One, the volume growth itself has come in flat. Most of the street was working with a mid-single digit sort of rain, and the street was working with around 5 to 6%. On that, if the domestic volume growth has been flat, that is a miss. Secondly, the company says that the same time last year was a high price increase sort of quarter. But same time last year, remember, most of the sales volumes were pushed through before the price increases happened. That was just pre the festive season. So it'll be interesting to see, how much of the impact did actually occur on account of the price hikes. My sense is that it could be a weakness on two levels. One, the unseasonal rains that we saw in October would have impacted demand. And secondly, in the second half post festive season, there was sluggishness in consumer demand, so that could have played out as well. Though the company is saying that in December the growth was double-digit, that also is in line with what a lot of the other companies are saying with regards to some green shoots seen in demand. Whether that comes by or continues into the fourth quarter or not is something that we'll have to monitor and hear the management in the conference call about. But for now, from a volume standpoint, from a revenue standpoint, an EBITDA margin as well as a net profit standpoint, it is a miss coming in from Asian Paints.
Some more internals. Yes. The international business has seen slower growth. 2.1% is the revenue growth in Q3, and the company has said that they have seen markets in Sri Lanka and Bangladesh getting impacted by the adverse forex as well as the macroeconomic slowdown. They've also said that they've seen some slowdown in the bath and kitchen business this quarter. So to take you through those numbers, bath fittings business sales declined by 11%, 10.9% on a year-on-year basis, and the kitchen business sales decreased by 7.1%.
Both those as well is, are misses, because a 10%, 11% decline in bath fittings business, which the company plans to triple in over the medium to long term, would reek of some sort of consumer weakness in terms of demand. The kitchen business as well declining by about 7%. But all of this, ties in with what the company plans to do in the longer term. That is point number one. And in the extreme near term, you have the competition, overhang looming on Asian Paints itself. We do have Grasim, which is coming about, and then we had Asian Paints announce almost a 9,000 crore capex as well, 2,000 crores in the last few weeks when we got the announcement of a water-based plant, and 7,000 crores for the back-end unit that the company, backward integration that they are doing. So the stock has recovered from the lows, though, because it was weak over the last few trading sessions, as was the entire FMCG pack. Will be, let's get in Naveen Kulkarni. Naveen, the reported numbers are extremely weak as compared to what the street was anticipating. But do you think that the street is looking ahead and perhaps taking some cues from the fact that December was good and maybe that may continue going forward?
Yeah, so if we look at the numbers per se, so This was expected to be a weak quarter, to be very honest, because our channel checks indicated that the volumes have been very, very sluggish. And most likely, whatever growth would have happened, that would have happened on the low margin products. So that is one thing which was coming through. And the market also, I believe, was building for this because the stock has not done much over the last 3 to 4 months compared to even the other FMCG companies. So from that perspective, these kind of numbers were expected. However, I will say that the margin profile looks probably a little better than what we were expecting, so that is encouraging. So from here on, if December was strong and this quarter improves, I think the stock can probably do well from the current levels.
Right. You know, one thing that was surprising this time around is that while the volumes are flat, overall sales also have increased by just about 1% odd on a standalone basis, 1.7% on a consolidated basis. And this is a time when we're speaking about the company having taken price hikes to the tune of almost 20% over the last 15 months or so. Some amount of price realization growth should have come about, right? What explains this weakness? I mean, are people really looking at only the lower end of products? And if yes, then it's not even showing in the volumes. I'm confounded by that.
Yeah, so essentially, as I was saying, so the volume mix is more to do with the low-end products, which is like putty and others. I think that is where the contribution has been higher, and that's why the realization growth looks a tad slower. But in the overall context, the EBITDA margins are still quite okay, right? So that is, I think, one thing they have managed to do well. So, but I think going ahead, we have to see how the volume mix changes. I think this quarter clearly, post the management conference call, we might get more details. But I think it's very, very clear that the products like putty and all have contributed much, much more.
All right. The question is, what do you do with the stock now? I mean, you said that if things look good from here, it can be a buy right now, but you do have a lot of overhangs with regards to competition going ahead, not particularly cheap in terms of valuations as well. And that initial smidge of a recovery that we had seen has been sold into. Now the stock is virtually at the low point of trade. What do you do? It's about 18% off its all-time highs, but still not particularly cheap. Your thoughts?
Yeah, so a franchise like Asian Paints, we would be very, very lucky to get it cheap. And history has suggested that whenever things look very, very stressful from those levels, the stock has managed to bounce back quite well. Whether it happens in a similar manner this time or not, something remains to be seen. But I would say that considering the way the market is shaping up and lack of opportunities in so many sectors, Asian Paints is probably not a bad bet as an allocation theme, right? So I think people might still allocate to Asian Paints. I don't see a huge downside. Upside is something that we can talk about, as in whether it's 15% or 20% or 10%. But probably I don't see much of downside, and it might be a still good allocation bet from 2023 perspective.
All right. Naveen, thank you so much for joining in. So that basically is the sum and substance of Asian Paints. It's a top-down miss as far as the revenues, volumes are concerned. EBITDA, I mean, there is an improvement, but that was something that the street was anticipating because of the cool-off that we've seen in the raw material prices. This time around, more than the margins is the demand, which is a problem. So let's see whether that sustains. The spike that we saw in December sustains into the next quarter or not. And until that, we get any sort of comfort from the management on that, the stock may perhaps languish.
And ultimately, people care about the EPS, right?
Yeah.
The profits itself have missed. So despite the margins coming in higher than estimates, the quantum of miss on the top line was so much that the profits have come in lower. So there is no case for, you know, any sort of EPS to move up because of the margin beat, right? That's not flowing through into the bottom line.
That's not flowing through. My sense is that post the conference call, I won't be surprised if we do actually see a few EPS cuts and downgrades as well coming in on account of the demand part. Because earlier, whatever downgrades happened were on account of margins, and now if the top line, fails to excite the street, then maybe we can see some problems with regards to any returns coming here. But then again, all of this hinges on what the management has to say about demand sustaining going forward or not.
First 19 days of January, let's see what the company has to say, whether that double-digit demand continues.
Okay, so that is, of course, an important thing to track, right? The management commentary coming in from Asian Paints. Right now, the stock is at the day's low. We will slip into a short break now and get you more on the markets and stock-specific action on the other side. Stay tuned.
आग को फैलने से रोकना मुश्किल है, पर